Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
It was nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, everybody, welcome back to another live stream. Happy Monday to you. And kind of a crazy week that we've got here in front of us, guys. Multiple major things happening this week. You've got some of the obvious ones like the election happening, November 5th, which is of course tomorrow. And then at the same time, just 2 days after that, you have the Fed meeting where they're expected to cut rates again by 25 basis points. Really crazy that we've got those two events happening back to back, which makes this week just my goodness, a wild week to say the least, because volatility is expected to be high. We've still got the VIX trading around 22.6, which, indicates that the market thinks that there's going to be some movement this week. Whether that is good movement or bad movement, very, very much depends on which side of it you're on, but we'll have to see. I mean, we don't know who the president's going to be. We also don't know who or what the exact Fed outlook is going to be. There's a thing with the Fed too. The story is evolving a little bit, at least from what I've noticed, which is, the bond market is not so focused on the rest of this year. They're really focused on next year, right? The big question now becomes, if we go take a look at the Fed Watch tool, when we look at the next month, this month, we're expected 96% chance that we're going to get one cut, right? 25 basis point cut. In December, we're expected to see another one cut, most likely, with a small chance that we hold rates in that report. What's interesting, though, is that then you start going out to, let's go to like May of next year. Look at this. This is where things start getting interesting because now you have some spread out kind of optionality here to what the bond market thinks is going to happen. So if we're thinking about this and we're saying, okay, well, you've got November and December likely you're going to see one cut per. The bigger debate, the bigger question is, what does next year look like? And the thing is, if you are somebody who is thinking that the Fed is going to cut rates, then you're probably looking to see some of that economic data continue to cool off. You think maybe the economy is going to continue to cool. And, maybe we got a good start on that narrative based on the NFP report that we saw last week. But there were some things that were positive in it. Some people pointed out that wage growth actually grew pretty steady. So people got wage increases despite, yes, there was a weak jobs print or jobs added. There was also some positive in the report. For example, unemployment rate kind of stayed flat, right? So we didn't see a big pop in unemployment rate, which would have really spooked the market, I think. You had the jobs added number really weak, but then you had the unemployment rate coming down or staying flat and the wage growth increasing. So there was a bit of stability in the report, even though the number itself was a bit comical and we laughed a lot at it on Friday. But, after the dust settles, it's kind of like, okay, it's not particularly dollar bullish last week, right? Or with that jobs data, but it's also not incredibly all bad either for the jobs data. Again, I kind of gave it a slightly bearish score for the dollar last week based on the way the Edge Finder calculates this data. A quick example we could do is, let's see, if we go to, what am I looking for? If I go to stock indices for just a moment and we look at the jobs data here, right? So NFP missed. So that was bearish, but unemployment rate was flat. So we gave it a -1 there, +0. So we got a -1 overall score on the jobs report based on our sort of report card way of doing things with the Edge Finder. Right. So we got a slightly bearish week, but not a massive one. Actually, I just saw something out of the corner of my eye here. This put call ratio jumped up. Let me look at this. Hold on. Put call ratio is something I love to look at. And look at this. We get the put call ratio jumping here. Now, what does this mean? What does that mean to markets? Well, this means that people are out there buying puts. When this number goes up, guys, what you can read that as is, oh, put buying is in demand. When this number goes really low, that tells you that call buying is in high demand. Remember, if you're not an options trader, this tool is still useful to you. If you see people buying a lot of calls on the S&P 500, market sentiment is very bullish. Market sentiment is very risk on. If you see people buying a lot of puts, like we saw last week, then you're starting to see a flip into risk off. So right now we're seeing risk off. I actually take that as a potentially bullish signal. If we can stay up in these ranges and the put call ratio, might get some nice discounts on some risk on assets that I think have potential to do very well. In fact, one area of the market that I'm watching is actually Bitcoin. So Bitcoin is a position I currently have on this weekend. We had a little bit of a dip throughout the weekend. I'm curious to see how this one plays out after the November 5th, tomorrow, after the election stuff. I'm very curious to see what the market does. If there's a clear and obvious winner in the election, one way or the other, I think the market will take that as a de-risking event. What I mean by that is that if you get Kamala Harris winning by a landslide or Donald Trump winning by a landslide, the market will then say, okay, that uncertainty is now behind us. And I think that risk on assets could perform well going into the November and December. That is my opinion. I've been on the record saying that. I could be dead wrong. None of this is financial advice. I'm just a guy on YouTube. So please don't, take anything I say as, you should do this, because that's not what I'm here to do. I share my opinions. Sometimes I'm right. Sometimes I'm wrong. My thought process, however, I'll back my opinion up. Put call ratio jumping up. I think you're getting some better risk to reward when you see this, right? So people are getting scared. Okay, I like that, because when people are scared, they oftentimes sell risk on assets and then you can get some better prices. But then there's another component to this. It's the seasonality data that we keep pulling up on the Edge Finder, which is this chart right here. Check this out. We are going into the best quarter of the year on a historical basis for the S&P 500. S&P typically does quite well in November and December. And I can already hear it. What about gold? Nick, talk about gold. Nick, talk about gold. That is every day. Not as exciting of a time for November and December. So, mixed on gold. Gold's screaming higher here in the last few months off of uncertainties about the election in the Middle East, in my opinion. Also, because, again, global central banks are cutting rates. But when we look at all this stuff, guys, my bias really still remains. I want to stay long certain sectors within the S&P 500. I want to take take a stab at the NASDAQ if I can. I'm already long the NASDAQ. And if I'm wrong on this, right? What if I'm just completely wrong? Well, then we just take a loss It's not the end of the world, right? You don't risk the whole farm on a trade idea. Never do I ever do that, right? Whenever I'm taking a trade, it is a calculated risk that I could certainly be wrong on, but I'm prepared for that, right? I'm gonna be wrong sometimes. In fact, I'm wrong sometimes over and over, right? During drawdown periods, it's inevitable. It's gonna happen. But this year, I have a pretty good conviction about November and December. And if I am wrong about that, I will pay the price happily. It is part of the trading journey. You're gonna have drawdowns. So that's, I'm going on the record of saying that. Somebody says screen is a bit laggy. Let me just try and restart that. I'm running a lot of things when I do these live streams, even on my computer, which is supposedly a pretty beefy gaming computer. Let's try this again. Hopefully less laggy now. But I think sometimes when I'm running, I'm doing the streaming software and then the trading view and then Edge Finder. I think it stacks up pretty heavy, even though I've got a pretty strong computer. I mean, this is a beefy tool, this is a beefy tool, and then streaming is a beefy tool. So just gonna sometimes have a little slow morning to it. Gold is up a little bit here this morning, not too much. Silver also bouncing off support. I saw this beautiful chart here for silver. We'll see if that takes off. I don't have a position on any of the metals at this time. Don't have it currently on the top setups window, but figured I'll keep an eye on the metals anyways, as I always do on the show, just because there's a lot of people who do trade them, who watch them pretty close. But I am personally not a big fan of only trading one thing. I know some people love to do that. That's great for you. But there are times where the things that I like to trade are not trading well. Like they're not trading in accordance to my plan or strategy. I can't find setups. I much rather have a list of things that I can potentially trade. And if I can find a setup, then I can take one. And that's usually how I'm using the Edge Finder to filter. Is I'm basically going right here. Currently, my watch list is really thin, right? So I've got Swiss yen, UK 100, Nikkei, Euro CAD, Euro yen. That's pretty much my full list of available charts to me based on the economic data, technicals, and sentiment data. So no new entries for me at this time. I do have some ongoing positions that I'm looking to manage, but currently no new trades popping up in this list at this time. So nothing that's really screaming at me. Yen pairs I do think are interesting, though. Let's look at some yen pairs for just a moment. Dollar yen coming down here a little bit. Euro yen also coming down. I do like the yen pairs more so on the long side. As I mentioned, I'm a bit risk on about, generally speaking, the markets. So yen pairs are going to be possible bullish setups for me if I can get, a healthy pullback and some confirmation from the Edge Finder. Swiss yen and Euro yen are two that are popping up right now. Let's just look at Swiss yen just for fun. Yeah, look at this. So I really like these charts. If I can get a couple days down on these, those might be great entry points for me, according to my rules. S&P and NASDAQ just had some movement starting out here the week. Of course, the New York session is getting going. Here's your 1 minute chart, 9:30 a.m. each day. During the U.S. session, of course, that's when stocks start moving and the indices can really make big moves. Here's the Dow Jones or the US 30. Russell popped up, came down a little bit here. Dollar index is down here on the day. Yields, by the way, also down over the weekend. There was, I don't actually know, there was a big gap. Did you guys see there's a big gap on a lot of different charts? One chart that I thought was really interesting, check this out. Oil gapped open and kept going here. But look at all these like gaps we've been seeing. Last week, there was a huge gap down on oil. It filled that gap, right? Filled that gap and is now, in my view, looking pretty much like it wants to try and go higher. I marked up this chart this morning, put it in our Telegram channel. By the way, Telegram channel is free to join. We'll drop the link if you'd like to get our chart markups here for free. We share that analysis in the Telegram channel. So price filled this gap here. I'm curious to see, or it's very close to filling this gap. Did it technically fill the gap? Let's see. Not quite, actually. It's very close. I wouldn't be surprised if oil goes up and tests this 73 mark. We'll see what happens there. If we can get a breakthrough on oil, could be a game changer, could change some things up here for us. As again, rising oil prices can cause rising inflationary pressures as well. Remember, rising energy costs means everything else goes up in price if that persists, right? I always use, and I say this 17 times a week, but the cereal box reference is anytime you go buy a box of cereal, how did it get there? people, the manufacturers, the grocery stores, the shipping companies, they got it there, and all of those parts involved the cost of fuel, right? So when fuel goes up in price, it does cause the rest of prices to also go up. VIX is up to 4% up on the day. Dollar index down 0.6. Nikkei's down about 0.7. So a little bit of risk off here to start the week. NASDAQ's down 0.5% here. S&P's down 0.17. Bitcoin's down 0.5%. Let's see if Bitcoin can bounce. I do have a trade on this. If we take out these yesterday's lows here on Bitcoin, which of course Bitcoin trades 7 days a week. So if we take out Sunday's lows here, that's going to be a signal. I'm going to go ahead and take profits on the move. I do have a floating profit that I would have given up. If this takes me out, it'll be a bit of a bummer because I gave back a lot of profits. But that happens sometimes with trailing stops. The unfortunate reality of trailing stops is sometimes this happens, right? No fun, but it happens. Other times, you just get these moves where you can just trail stops and it goes, into the heavens. I wish those happened more often, but they do happen often enough that I can, make some good profits off of those kinds of moves when they show up. We'll see. What positions am I currently in? I have a Bitcoin position, as I'm just discussing. I have a NASDAQ position. What else do I have? What else do I even have? Is that it? Bitcoin and NAS? Oh, I have some ETF trades. I'm long SMH, XLRE, Bitcoin, IBIT. Yeah, that's pretty much NQQQ. Those are my 4 positions currently. Kind of light on the positioning, looking for setups, but not quite seeing too many just yet. Looking at some yen crosses for pullbacks. So we'll see. I did mention over the weekend the commitment of traders data. I thought was pretty interesting. If you didn't see that video, big accumulation on the S&P 500, some big aggressive buying. Check this out. Long contracts added 7,600. They decreased by 35,000 short positions. Big money, made some moves on the S&P 500 last week. They also bought the NASDAQ, which I thought was interesting. They sold things like the yen, US oil, silver, Dow Jones, copper, euro, gold. These are things that got sold by institutional investors last week, according to the CFTC's commitment of traders data. So I thought that was really interesting. Keeping an eye on the COT report every week is something that, helps me to get a general idea of which direction smart money is moving their funds in, right? That's not even speculating on where, you see all these things on social media, right? People talking about how, here's a smart money candlestick pattern, right? And I find that to be total nonsense. Candlesticks can be very deceiving. They can be all over the place. They can be a lot of noise. Tracking institutional money, to me, shouldn't be a guessing game. And that's why I track the COT report. COT report is not guessing. This is a reported, filed thing every week where we can see what institutional money actually did, right? According to the CFTC. So the reason I mention that is because, again, a lot of traders think they're trading like the banks, when in reality, the best way, in my view and experience, to track the banks is to actually just track their positioning through the CFTC's Commitment of Traders report. Now, it's not perfect. It's not a holy grail, but it gives you a general idea, a general sense of which direction smart money, true smart money, is buying or selling in terms of your favorite assets. By the way, Edgefinder is currently, you see it right below me here, by the way. Producer just showed that up here. Awesome stuff. That looks great. 40% off for Black Friday right now on the Edgefinder. And for stream viewers who are with me here live, we're actually going to do 45% off. If you chat directly with a member of our support team, they're standing by to get you access to a copy of the tool. The reason we do this, by the way, is so that people who have questions about the tool, or you want to make sure it's the right fit for you, you can speak to a real qualified person on our team to give you some information about the tool so that you make sure it's the right purchase for you. If you have not already taken advantage of our discount that we're doing this week, or this month, actually, we're doing 45% off. It's the biggest sale that we do all year for Black Friday. Don't miss it. You get access to the Edgefinder. You can pick up the access to the Discord signals room if that's something you're interested in. All of it is currently on super discount. We got, again, discount codes for Black Friday on the new stock box, the memberships to our group, the pulver alerts, got a little bit of everything. The team did a great job putting it all together. So message us if you have any interest in getting something, and they'll get it for you for the best price of the year. So again, we'll see risk off a little bit here this morning. You got NAS down 0.64%. Bitcoin's down a little bit here. Again, these are two that I have positions in, so I'm just a little bit partial to them. Euro's up about 0.6% here this morning. Shout out to Emily. Emily's great. Answered all my questions the other day. Yes, she is. She's great. Whole team is great. You got Drew, Hallie, Emily. They do a great job just answering people who have questions about the tool. So again, if you have any, feel free to chat with them. They're more than happy to get you some resources, get you access to the Edgefinder free course, whatever you want. They'll help you out with. So Euro here seemingly has rounded off, at least for the time being, put in a low here. This was, in my opinion here, it was kind of due to happen. I unfortunately took a loss on this because I entered this idea. I took I'll be fair, it was a loss, but it wasn't a huge loss. I shorted the Euro here. Price went in my favor. I trimmed my stop loss just right there and then got stopped out here. I'm actually glad that I did that because now the market has continued higher. And I'm not looking to rush back into the Euro because I do think that this thing could be potentially making a beeline here back to resistance. That 1.10, 1.15, let's call it. Sorry, not 1.15. What's the level? 1.102. Right? This level here looks interesting for a possible retest trade. I'm going to keep an eye on what the Edgefinder has for me in terms of a bias at that time. But if we get a pullback, I like that quite a bit. So euro dollar is sort of tentatively on the watch list. Pound dollar, not as clean of a chart. It was in this great upward trend, came down to this level of what I thought could hold as support, but then just kind of chopping around. So not loving the price action on this one. Kiwi dollar here on the currency side. Big slide here. No real bias on this one for me at this time. So just going to kind of stay sidelined. A lot of neutral pairs. But here's the thing, guys. I'm kind of okay with being a little bit neutral to start out this week. There's going to be some really big moves. If you're just joining us here in the last few minutes, let's think about what we've got. We got two main event items for the month of November here happening this week. Number one, you got the election, right? The election night is tomorrow. That's going to be volatile, most likely. At the same time, on Thursday, you have a Fed meeting where they're going to decide what their outlook is for interest rates, which both of these events are like red star potential events. They could cause really big movements. So I'm kind of okay with being on the sidelines and ready to take positions if they form, rather than like I'm locked into a ton of positioning and just, kind of hoping things go well, right? So I'm okay to kind of be a little dry powder going into this week. So NASDAQ, if it gives me a bigger discount here this week, if I get stopped out, right, that would be okay, because I wouldn't mind if we see this thing, drop and maybe see a bigger reversal or pullback here. I could potentially get some better prices on some things and maybe even sell some cash secured puts, which is something that I love to do when the market is down. So we'll see. Same thing with Bitcoin. I may get stopped out of this trade, trailed for a profit. I took this trade back here, 10 days or so ago. And now looking to see if we're going to either trim out of this trade or trail out, take profits on it, or if this thing can find support before then, I'll look to trail stops further into profits. Let's see. Silver up about 1% here. Gold, I still think actually gold may be due for a bit of a pullback, but timing these things is very difficult when it's in such a rock star upward trend. So I'm just kind of watching gold here. I do think that, maybe you see a bigger pullback down to this 2680 mark, maybe following after the election. If there's here's my guess. This is a guess that I have. If you get an election, if tomorrow you get like a really strong favorite, like it's very one way, either very Trump or very Harris. If that happens, I think a good likely scenario is that gold could go down. That being said, I don't know. I think that it's possible that if you get a very strong Trump favorite tomorrow, what could happen is gold actually could go up on the uncertainty that we here's an interesting dynamic with both of these candidates, right? With both of these candidates, we have examples of their administration. We've had the last 4 years with the Biden Harris. She's not the president, but she's been in office. Trump, same thing. We've seen him. One thing that we know about Trump, whether you like him or dislike him, is he is not afraid to speak his mind and be pretty aggressive. That being said, on the global stage, that could cause some uncertainties. We don't know how that turns out, and the market simply not knowing is enough in many cases for gold to go up. I think that with Harris, you kind of know most what you're going to get, and it's possible that if Harris wins, you might actually see gold sort of pull back. This is my best guess. I could be wrong. I could be dead wrong. Bitcoin, kind of the same scenario. I think Bitcoin could potentially go up if there is a Trump victory, just because traditionally speaking, less regulation is a push that Trump has made for, which regulation and Bitcoin don't go well together, but less regulation and Bitcoin go great together, right? So there's that dynamic that is potentially a factor in there as well. It's going to be an interesting week. I'm going to be live streaming the event tomorrow, which I will not be streaming too late, but I'll be streaming to see what we can get. I'll watch some of the maps. If you guys would like to watch the election with me, it's going to be interesting. We don't know what's going to happen. It's going to be volatile, but I'm going to try and just bring a market's perspective to what happens tomorrow. And if you'd like to join me on the live stream, I will be streaming a chunk of election night tomorrow. So make sure to join me. If you're new to the channel, consider subscribing. If you turn post notifications on, you'll get notified whenever I go live for the election. We'll see. Both candidates, here's something I've said for the last few months. Both candidates, their outlooks are likely to spend a lot of money. Both candidates are expected to be potentially inflationary in potentially different ways. Trump might upset some of the economists out there with the tariff situation. Potentially that's inflationary. And at the same time, Harris, both administrations have examples behind us of them spending a lot of money. You might disagree or agree with the ways they've spent that money, but to say one is inflationary, one is not inflationary, I think the bond market is telling you completely otherwise. It's not my opinion here. Look at the bond market. Bond market is saying, ooh, there's going to be a lot of printing of money. And that's why bond yields are up, in my opinion. But you can see here's the 10-year. 10 years up as well. Now, what does that mean for markets? Well, it, to me, is part of the reason why I'm a bit cautious on this gold market rally, is if you have higher expectations for inflation, what that could mean is the Fed may choose not to cut rates. In fact, one of my opinions for 2025 currently is that, yes, the Fed is going to cut rates, but I don't know that it's going to be as much as the market thinks it's going to be. This wouldn't be the first time that the market has thought we're going to get way more rate cuts than we actually have gotten, right? Do you guys remember in the beginning of 2024, the market rallied so hard on the idea that we were going to get 6 rate cuts. And we have only had, going into November here, we've had 1 rate cut, right? So we're likely to see 2 more, so 3 rate cuts. But my point is, a lot of times the market gets overly excited, and I do like to keep an eye on the bond market for this exact reason. The bond market oftentimes is more pessimistic, but it's also oftentimes pretty practical as well, right? So we want to keep an eye on the bond market, because the bond market is saying we're probably still going to get rate cuts, but the stock market is saying we're going to get a ton of rate cuts, and the bond market is saying we'll get some rate cuts. There's a very different story playing out. Who will be right? Who will be wrong? Bond market seems to be saying we're going to get some rate cuts, but we're not going to get nearly as many as previously thought. And the stock market is kind of priced for, we're going to get lots of rate cuts and no economic damage is going to happen. Stock market, the nervous thing for me is there's a lot of great companies in here, but there is a lot of price for perfection going on, in my opinion. There's some really, really great companies in here, but the stock market is priced like they're very expensive. What I'm saying is I think the stock market is relatively expensive. That being said, stock market being expensive does not exclude me from taking trades on it in the long direction. Evaluation, the valuation of the stock market historically is actually a really poor timing tool. if the stock market is priced expensive, oftentimes it gets more expensive, right? So trying to say, "Oh, stock market's too expensive, that's why I think it's going to crash," that's difficult. Now, if the stock market is expensive, quote unquote, based on a price to earnings ratio, I may be a bit more cautious on my entries, but shorting it just because it is expensive is historically a really, really, actually, it's not a good strategy, right? A lot of times when the stock market is expensive, it proceeds to get more expensive as momentum continues to build. So we'll see. Speaking of, stock market is all over the place here this morning. You had the Nasdaq big drop, popped right back. Same thing with the S&P. We'll see where that goes here today. What a ugly candle to start the day there, though. Probably faked out a lot of traders here this morning on the Nas and S&P. So far, we'll have to see. We got Yen Man in the house. We got Ivan coming on to take over the show here for a few minutes. Before we break to Ivan, let me just mention again one more time, if you guys have not heard already, we're doing our Black Friday sale currently on the Edge Finder and the Gold VIP membership. You get access to our trade alerts in there, or you can get access to the Edge Finder. It's currently 45% off. We're doing a huge sale this month. We're about 2.5 years since we initially launched the product. We have traders all over the world using our software to help better understand sentiment, positioning, right? Commitment of traders data, put call ratios, seasonality tools, economic data made easy to understand, and of course our algorithm, which kind of strings it all together and generates bullish and bearish ideas. If you don't have a copy of the Edge Finder, this is your chance to get it for the biggest discount of the year. We're doing 40% off everything, but if you send us a direct message right now using the link in the chat, or in the description of this live stream, you can get 45% off by speaking with a member of our team. Okay, guys, we're going to take a quick break, and then we got Yen Man taking over the show for a little bit. Stay tuned. We'll be right back with Ivan.
This was our best year yet. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
Hello everyone. As I am confused, as I don't know what my voice is, one thing I do know for sure is that we did have a very profitable, well, not a profitable week per se, but we had a profitable trade in the euro dollar. And I'm not trading today. You might say, oh, that's crazy. Well, just as crazy as that thing is, or as crazy as that thing is, I'm not interested. And therefore, we have pullbacks on the yen pairs. Woohoo, great. And we are in range. We are trending, ranging. We are ranging. But everything in my world will start trend when we get the election out of the window. So until then, we'll just have to do some bit of analysis. How can I not say that today? Analyze the stock market, the Forex market, the gold market, the commodities market, all the markets. All right, cool. What do you think about SPX500 if Trump wins? I think that is the most crucial question you have to ask yourself. And to be honest with you, I don't think that it's going to have a very crucial, difficult, any different impact. Back in 2016, when Trump was new to this thing, the stock market had a very good run higher. That doesn't necessarily mean that it is going to do the same thing this time around. But given that stock market hasn't really fallen until now, tells me that the market still has good confidence in both candidates. And especially since Trump has been the one that has been ahead on the polls, forward slash the bettings, I think that is very likely that the market is still going to continue higher, because the market would have told you very clearly that they were not liking that Trump would be in the driver's seat as the president of the United States again. So, we were able to catch a bit of a pullback on the dollar. I believe going forward that whatever this is just that I don't know what is going to happen next. So I'm not going to do more, but we've already gotten what we wanted. That has led to quite a low price on the euro, quite a low price on pound, quite a low price on Australia and New Zealand. I believe going forward, we are going to have dollar strength, meaning this one should go lower, given that Trump wins as per the bettings. But we will not know until what? Wednesday, Thursday? And that leads me to the other question. What about Fed? Fed is going to have their rate cut on Wednesday, aren't they? So that's a good kicker in the mix. That's going to create a lot of volatility. I am a kicker for volatility. I love volatility. Volatility is my friend. Given the situation that I can backtest it, or I can do the same situations many times and I can do well. That is not the case in the next 2 days going forward. So, over to the yens. As you can see in Australian dollar, very straightforward, range bound. And I have proclaimed that these ones will start trend going forward. That is my trade plan. That is my wish. That is my hope. But if we start falling, what will I even do? Is it Thursday? I do apologize for that. It's always a Wednesday, but I can always double check. It's also quite late in the day, so it's, as you can see, it's 4 p.m. So sorry, 7th, and 7th is Thursday. I apologize, Lee. I'm sorry. Please forgive me. That is going to have some kind of impact, and the question is for you yourself, the stock market and everything else, how do you differentiate those two different factors, adding that Iran wants to kick back at Israel? Where's risk going to go there? The institution doesn't buy calls and puts. Yeah, it's okay. I'm trying to be polite, James. You know, I am a man of proper etiquette. So the risk going forward is heightened, and that might lead us to the VIX. I don't know if anyone who's trading WIGs in this group, but I do know that we are at the same level as of 2020, around 22. This one is likely to have a bit of a turn higher if the Iran takes a bit of a hit. Trump goes in as the president. Taiwan wants to do something. And they did a documentary, or they did an interview yesterday in China, and most of the people over there said, well, you know, we don't want any trouble. So we've heard that Trump doesn't want to start, do not want to start any wars. So we hope that Donald Trump wins. So, in that kind of note, if there's no new wars, if there is no new rockets, if Donald Trump wins, this one is likely to fall down, and dollar may be falling a bit down. Stock market might rise, and we'll go back to some kind of neutral geopolitical situation. So, yeah, I have a train of thoughts. Gold. 2,743 is currently the gold per ounce. And I saw Nick talking about this one might go higher. And I can agree to that. I can say that, because somebody said something last week. Was it about that something wasn't bullish, but it was fundamentally bullish? When I think of gold, when I think of any assets, I think, what is the driver? Because if you look at a car, if you take GTA for that matter, or whatever those car games are called nowadays, if you take GTA and you say, I'm taking a car, and I'm driving the car forward. That looks like a turtle, but okay. Anyways, you are inside this car, and you hitting the accelerator. You will then, go forward. The moment you stop hitting the accelerator, what generally tends to happen, you stop, or if you hit a wall. So, what generally tends to happen if the drivers or the acceleration in gold disappears, you kind of lose momentum, and therefore you need to find the reason for why gold were to go higher. And with inflation being inflation, with Fed cutting again, with somehow the same kind of economic situation in the United States from one day to another, this one is likely to still have the continuation higher. Given that also that China and the Chinese feels like, our economy is still going to go to the ground, and they still are fearing that, the economic development isn't going to be the same tomorrow as it was before. I hope if Trump wins, he stays off Twitter. B-Man, I think that is absolutely 100% wrong of you to say, because I believe 100% he's going to be there. That doesn't he have like his own social media platform that the media is on anyways? They still are going. The point is information. If it's Twitter, if it's Facebook, if it's Instagram, if it's TikTok, or whatever it's called, or if he has his own news station, it's still from Trump. Whatever he says goes to some kind of social media, whatever that is, and it goes to the media and it becomes news. As long as that is still a thread, or there's still a connection there, or they still are going to ask the press secretary, whatever Trump says, whatever Trump thinks, is still going to get to the news. And therefore us. We want peace. Absolutely. We need peace. And that's the only way. But gold is still going to go higher. And the driver, in the sense, is economically driven, geopolitically driven, interest rate driven, central bank driven. And those are still the same today as are hopefully going to be there tomorrow as well. So for those who are gold buyers, I don't like the pullback yet. I still want lower. And I've warned a couple of times, and Ivan sounds like a broken record and everything. Whatever Ivan says, whatever it does, the volatility that is not there yet, the movements in the stock market, in the gold market, in the Forex market, in the options market, is still not there, right? So if you're thinking to yourself, what could possibly go wrong? If you take a trade now, somebody asked me, somebody asked me earlier in the mentorship group in the Discord, asked me, they have some profit in UJ, or they're proud of having some profits on UJ. UJ, also any stock, commodity, any financial instrument is not going to have the same price constantly tomorrow or Thursday or Wednesday. Sorry. What does that mean? That means that we might end up at the same price, as most of these instruments I've shown you so far has reverted back to the same place. The only problem is, does your stop loss cater for a 5% move? So in that space, how do you fit? I think on dollar yen we were, I think it was about 4% move in 2016, and a good 2020. I think that was about 1% maybe. Might be wrong. Yeah, 1%. So somewhere between there and there. And can your stop loss can your stop loss, can your trade, can your account survive that? And for me, my answer to that is it's not worth it. Very easy. And if we're going to do 1% move lower or higher, for that matter, we are going to go down to 150. If we do 5%, we might do, it's not necessarily B, but we might go down to 144. That's about 700 pips or 160 pips. That's your area, presumed area of volatility. What if Harris wins? Regardless who is winning, you're still going to have this volatility that I'm talking about. So, you also not telling you to do anything whatsoever. You do what you do. But what I'm telling you is on yen pairs, dollar pairs, Swiss pairs, Aussie pairs, New Zealand pairs, all pairs, pound CAD pairs, or assets, all of them are going to have impact. Just a bit less. And you have to ask yourself, is this going to happen if Harris wins? And the answer is yes. But the only difference is that where are we? If we are in a volatility event, we go up and down. Oops. We go up and down. The winner is going to determine the direction. That's going to be the only difference. So if we go lower or if we go higher, depending on the winner. So you say, Antonio, that we have support at 151.50 of support. I can agree to that. I can agree to that. But I have one crucial, important point for you. Is that going to hold? And what you're currently looking at is normal market conditions. The question is, when you have an election, when you have this one-off every 4 years, is that a normal event? And is that can you trade it as you normally do? I hope that they will not rig the election. And all those questions about rigging, about militant groups, about interference from a third party, what was the BBC or the British they were complaining about, if Russia or China or CSI or FBI or CIA or whatever, doesn't really matter. Those are outside of your control, right? What is in your control? And I've said that quite clearly, at least to my groups, and I've said it. You have to keep calm. You see me, I'm calm, right? I wasn't calm previously in previous elections, and the volatility was crazy, as you see and you feel it. But then you have an outcome, right? And then the question is when you have a market condition such as this, right? You have this kind of situation where, let's say this is the election. You went lower, but now we're breaking higher. We broke out of the range that I've created, and then to the upside. Okay, what are you going to do then? It goes back down to what is your process. I've said for this past week now that anyone who's listening to what I'm saying, or anyone who's listening to me, is your job was to go through your trading, go through your process, go through your mindset, go through your mentality, go through your psychology, and to pluck away every doubt, every negativity, every bad trade, find your best trades, find the conditions that you need to be, and be very clear and very specific about what you want to see. So in my little world is, if I see this, I need a pullback, right? And Okay, it's just a pullback. It's this pullback. It's this pullback. And you have all these kinds of reasons and ways of getting in. And I can say, okay, this is a daily entry. Okay, that's not too bad to have a daily entry. I can probably do that. But I've done this so many times that I know that when we go down to central pivot here, I have a certain amount of chance of winning, right? And then we go a bit lower, and we go a bit lower, but then we have a new day. Should I be buying here? I don't think so. We are in a range, and then you're just running your process every single day, every single time, every single moment that you're thinking of trading. What is your process? There's no different between today or yesterday and on Friday. The market doesn't change unless we go absolutely bazooked. But are you going to be trading in an absolutely bazooked market? And I would argue, James, that both candidates are not going to do a great job. Somebody's going to lose, whoever is winning, right? But the only question you have to ask yourself as a trader is, will the economy crash, or will the economy suffer so greatly that we're going into recession, or we are going into hyperinflation, or we are going into any other extremes than where we currently are? Because currently the US economy is slowing down, is slightly going up again. Okay. And if we go back into 5, 7, 6, 5, 7, 6, 5, 6, 7, 8, 9% inflation, that's where your risk as a trader is, because then we're not going to talk about cutting rates anymore, and dollars could be super duper strong. Or are we going in a situation where the economy is like tanking, and the inflation is going negative year over year, and everything is, it's a shock to the market. Are we there financially? Or for that matter, are we there emotionally? Right? So you can say that, I would argue that quite easily, that no matter how much you look at the media, no matter how much you look at their policies, no matter how much you believe they're a good person, a bad person, great or bad at driving the economy in whatever the direction that is that you might believe, you still have to be data dependent. It's still the same thing as your evaluation on the inflation, as your evaluation on the presidency. You have to make an assessment of governance of every central bank of every country that you're trading with. Do you know that? You have to make an opinion about Governor Bailey. You have to make an assessment of Governor Lagarde or Governor Orr. And you're wondering to yourself, have I ever done that? You probably haven't. And it's probably because they're good at governing, right? And since I'm not American, I can't really vote in the U.S. in the U.S. election. But those who can, please do use your voting rights. It's kind of like your brain has to go back to some kind of default of, okay, what is the implication? What is the economic implication? What is the market implication? And if we now see a market that goes up to like 1,000 pip move in whatever direction we go in within the day, is that within your rules of engagement? Is that within your normality of trading? And for most of us, it is not, unless you traded 30 years ago, where normal move was 500 pips or so. So my point is, I want to look for buys on yen pairs. I would argue that Swiss yen should probably go lower. I'm waiting for New Zealand yen to make a new higher high and higher low. I'm waiting for pound yen to make a higher high and higher low. It seems like they have come down to the price that I actually posted last week. Not that I have made any efforts to buy it at the level of 196.50, but it is a fun little experiment in the meantime. And I can say that I need price to break above here. There is the first one. There's the second one. And then we'll take it from there. I traded this in the last election, the yen pairs and the dollar pairs, and it was one of the better times. It was one of the better times I've ever done. I think I made 10,000 pips. So to me, I'm ready, loaded, and all of that. If you want to be in the same mindset, you can join the VIP. You can join the VIP. You can join the VIP group that we are in, mentorship. I'll probably be having a lot of more open door meetings this week, but if not, you can go also over to my YouTube channel and you can send me a message on Discord or there to get one-on-ones. Other than that, I wish you guys great trading going forward. And as the euro dollar went into profit last week, boom. See you soon.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a pulver alert.
A pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but like, why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Hey everybody, happy Monday. How we doing? Welcome back. Just looking at everything this morning. Today seems to be pretty calm, pretty chill, which is kind of expected. That was the plan. So grabbed a few bucks out of the SPX this morning. Want to see if we just kind of avoid a big directional move today. Last week we had a pullback. I mean, just having a look at where prices are, it's pretty easy to see. We have some gaps we could potentially be playing with. This gap from FOMC is still, oops, let me change the color here. This post FOMC gap is still a possibility to get filled right in here. And then the gap from last week on, let's see, that would be Friday, Thursday, Wednesday. So Wednesday, Thursday last week, another gap just a little bit higher. So price can obviously do whatever it's going to do. We have the election tomorrow. I don't know what it's going to look like. I don't know if it's going to be, good, bad, and different. I don't know if it's going to be a victor is determined. According to 538, which is some full nationwide polling, it shows that things are a little bit tighter. This is national presidential polls showing it's pretty tight race at like 47%. So 48 Harris, 46.9 Trump. But then you go to Polymarket, Robinhood, all those betting polls that have been popping up in the last month or so, those are showing like pretty much a landslide. It's like 58 to 60+% favoring Trump. And again, I don't know if that's a real indicator of the turnout that we get for voters. I mean, obviously you can vote absentee. You can go to the polls tomorrow, but I'm not sure what that's going to look like. So all I'll say with the election is this: it's happening, whether we like it or not, and the market's going to digest whatever happens. And I would say that the worst case scenario would be that we don't have a victor or we don't have a president decided by the popular vote and electoral college by Tuesday. So Tuesday night, if we don't have somebody declared president, then the markets might take that with a lot of uncertainty. Now, I did look at something like a vol event where, if the market, I mean, here's one thing I'm going to do with the easy trade, and I'll throw a couple of these in my pulver alerts, but easy trade for me is just watching to see if I get long now and by the end of the year we're higher, well, that's an easy trade. Okay. If I get long now and it pulls back in a volatility play, I'm still willing to kind of get into these trades at better prices and different contract sizes. But again, the idea is I want to be longer term. So we have not only the election this week, but we also have the Fed. The Fed is expected to cut rates. That is a 99.8% probability that Thursday they'll be cutting rates. Okay. And then on in December, there's another 25 basis points there. Possibly a pause in January. It's about 44 to 49 right now. Still favoring the cut in January. I would say that if we get cuts, cut for November, cut for December, question mark for January, and question mark for March. Okay. Going through, let's say, May to December, I mean, I would expect the Fed to pause as opposed to they cut, and then raise again. I mean, that actually would be way harder on the markets to see the Feds cut aggressively and then raise. So I hope they don't have to backpedal or pivot into, number one, pivot into a pause, number two, pivot into a raise, all because the 10-year yield continues to go higher. So 10-year, I mean, finally, we're getting some traction to the downside. It's down 2.67%. And this is going to be the big deal right here. Like this 10-year yield that has ripped up from 3.6 all the way up to 4.4, a 0.8% increase is also why we've almost had that go tick for tick with the 30-year mortgage. Right? We saw the 30-year mortgage go from 609 to like over 7%. All that is pretty much based on the longer term financing in our yields. So the 10-year has gone up a ton. I would love to see the 10-year continue to head lower. If the 10-year heads lower, that means that the mortgage rates can settle down. This business refi, auto loans, mortgages, all those rates can start to settle back in. There's not really a technical play here. It's just if yields go higher because bond traders want higher premiums to hold debt, that's what the market's telling us. There's going to be some inflationary pressures, and we don't know. I mean, it's going to be month to month. It's going to be the Fed is waiting to see what the data shows, whether it's leading or lagging. Nobody knows. I don't think the Fed is going to get it all right. I think this soft landing scenario looks a little bit rougher unless something gets adjusted here, where if the 10-year drops, that's a good sign for things to kind of normalize. Okay. Ideally, I would say this. I'd love to see the 10-year yield start to settle back in and maybe pull back to like 4% or so. If we somehow, 4% is fine. If we cut another November, December, 25 basis points, maybe even again in January, and this market is still seeing relatively good data, it's not super inflationary, then perhaps this gets back into the sub 4, and all of a sudden we're looking at some fresh lows in mortgages and other things. So if we really want this like no landing, soft landing scenario, I think the 10-year yield does have to drop. So that's one thing to pay attention to. Okay, we'll do some top down here. Yep, just give me a little bit. But I'm gonna say this on the election this week. So big data this week. We got a lot of stuff going on. We have over 1,100 companies reporting earnings. It might take a backseat to what's happening with the election. So we have the U.S. election Tuesday, and then will it be officially decided? And that's the question mark. That's my one concern with the markets this week is that we don't have a winner declared, and there's going to be state to state to state, and it's going to drag on for several days, or one side says, no, that's not right. There's voter fraud, there's election fraud, blah, blah, blah. I don't know what side that comes from. I really don't care. I just don't want it to be a dramatic election. So will it be decided? I think if it's decided, good. The market checks the box and we can move on with our lives, and we'll figure out how to deal with it in 2025. We have the Fed on Thursday with a 99% probability of a 25 BPS cut. Okay. So that's what's happening all this week for the markets to digest. I don't know if the 1,100 companies are going to be as important as what we saw last week with Mag 7. That was where most of the market cap sits. This week we've got over 1,000 companies reporting. That's obviously a lot. But yeah, I think what the market's going to look at as far as the fundamentals is consensus wise, is it still good? Are we beating top and bottom? Are we beating earnings per share, beating revenue? What's the optimistic outlook? Is it Is it good? Is it positive? Is it negative? I saw last week, I think it was FactSet released a bunch of transcripts on these earnings reports that a lot of companies were mentioning election, election, election. So once the election is over with, does it pop up on all these earnings calls? Maybe it's more just forward guidance. Okay. All right. So that's what's happening. Let's go top down. So today, again, relatively calm. We've had a pullback here the last couple of weeks to the tune of around 3%. So high to low was around 2.97% on the S&P, which is fine. I mean, a 3% pullback is actually quite minor. The one thing I would be watching for if we have any type of scare this week or any type of uncertainty would be the two gaps that I just talked about. Okay, this gap from Wednesday to Thursday last week, and then the FOMC gap from September. Okay, this could get hit and still make lower highs and lower lows. I personally would almost like to see this week, especially if we have another retest of the 50 or even a test of the 100 moving average. I'd love to see this level offer up a chance to buy a dip or a chance to use some options to get some dips. And I'll still stay longer to say going out into, let's say, Q1 of 2025. I don't mind these trades all expiring for me in Q1 of 2025 to have them be income. The last few weeks, especially, it's not been big positions. I've got a lot of buying power at the ready that I haven't deployed yet. And I'm just kind of waiting to see, like, okay, I'll start positioning for income or start positioning for better time trades. I looked at a trade this morning with an earlier trade group that if we were to price out, like, okay, we've got some indecision going on with the election this week. Is there enough to play a vol event? Well, I looked at pricing out like a buy call and a buy put and try to go both directions and also sell against it. And it was going to cost me about $13 to max out at $15 or $20. So that's a terrible price for something that gives me a $2 profit at expiration or a $7 profit, which is fine, but I have to wait all the way to expiration. So that trade doesn't look good. If I just want to sell, I think we're going to have direction, and typically November, December, and January directional. And so I don't want to say like, well, I'll just sell premium because the market shouldn't go anywhere. Well, that's not true because more than likely the call side will get tested. So if I'm looking to sell anything options wise, I'm looking to sell here, sell premium and see if the market just stays above those lines in the sand. So for an options trader, that's also why I had mentioned this last week, and I'm not sure if the team is showing this in the chats or if you're talking to one of the team members at A1 Trading. If you purchase the gold VIP bundle that I know we're running some big Black Friday sales for A1 Trading, if you purchase the big bundle, so you've got your A1 Trading, you got the Edge Finder, Stock Box, VIP membership, gold access, trade alerts, all that stuff. If my trade alerts are included in there, I've got a full strategy course called Practical Options that I will give to you. And that is 13 strategies, a PDF, and 11 videos on all the stuff I talk about here in these live sessions, especially when it comes to options trading, making sure that when I mention a strategy or talk about puts and calls and, selling versus buying, that it starts to make a little bit of sense. So within about 3 hours, 4 hours of education, I get you up to speed and actually have you understanding options if you like trading it. I love trading options. It's literally about 90+% of my portfolio. It allows me to position for longer term with way less capital. It allows me to generate a lot of income, week to week or month to month without having to tie up a bunch of money, and also have dry powder at the ready. So when good opportunities do present themselves, it's very easy to deploy and put in the capital that I want at a much better price. So there's a lot of ways to trade it. It's super flexible, and that is why I've loved options for the last 6-7 years now. All right, food for thought. Okay, so where are we? We're right here on the 50 period moving average on the S&P. NASDAQ, same type of thing, pulled back to the 50 period. We got a couple of daily candles. We got a gap higher, gap lower. It's the same situation as the SPY, right? Here's the S&P post FOMC gap, and there's our gap from last week. So is it possible for price to go both areas? Yeah, it's possible. We could have a double gap fill, right? Does that give us any clear direction? Not really. So what I'm positioning for longer term is I just think the market's going to find a way to get to highs again. Okay. If we get a pullback, pretty well supported, pretty well supported, pretty well supported. I mean, even pulling back in this 200, pretty well supported. So even getting a 100, 144, 200 pullback levels, I'm still looking to revisit highs or get some support. Okay. This is probably more unlikely than anything else. I think right now the market's like, just get the election out of the way, and then the market's ready to, kind of resume either revisiting highs or even resume an uptrend. Go to the Dow, same thing. The Dow's actually had what almost looks to be a little bit more threatening, because we took out this previous low. We filled actually this FOMC gap. And I'm wondering if the Dow is, I don't know. I mean, maybe the Dow, same thing. We just have some lower highs and lower lows. This would be a 100 period. I mean, I'd probably take a position on the Dow, position on the Dow, position on the Dow. So any deeper pullbacks, I'm just going to stay long for right now. And I'll stay long until price proves otherwise. I mean, I know pullbacks looks like gradual pullbacks are not a deterrent to say like, oh my God, the market's falling. So what I have going to the downside right now are hedges. Okay. I've got to trade in on ES right here for the 8th. 1, 2, 3, this trade right here. Okay. This, if you can see my little flag, this is on my broker chart. So this is the real price right now, and it's in profit. Now for full profit, I can take this all the way to expiration, which is Friday. And I also have a profit trap. So right now, ES, which is the S&P futures feed, this can go from 57.65 all the way up to a pin price at 58.90. So is it possible? Let me check this on my table for ES. If I go out to the 8th, how high is the expected move? The expected move is around 59.05. Now that means that it could actually cause me to risk something on this trade, but you can see my levels. 58.90 is my pin price, and that looks like this. On my options trade, this price right here is my max profit of around $3,500. Okay. This all the way out here. So where price is right now, because price is lower, this is around $1,000 of profit. So as long as price stays below 58.90 this week, I'm looking at about $1,000 of profit per account. Now, if price is going to go higher and start to threaten, 58.75, 58.80, 58.85, I still have that profit trap, which is a 3-to-1 on that risk. Okay. Now, the easy trade is price just stays where it is or goes slightly lower, and this is a full $1,000, and I just take the profit and be happy. Okay. But that profit trap is there for a reason, because, number one, it's a hedge. I don't necessarily think this is going to be a winning trade, but if it is, that's good, because at least I'm offsetting some gains. But, I've got some good P&L floating on the day. Price is cooperating. We're kind of in between a couple big levels. We got a lot of drama happening this week, and we'll see how things go. But right now, to the downside, I've got some hedges. I'm long MES, I'm long MNQ, and those are just to see if the market drops, take some profit, and then I've got some index trades as well. But otherwise, I'm just going to position for longer. I want to go out to December, go out to January. I'll look to see if the market can revisit those highs. Okay. All right. So let me keep going top down here. Russell hanging in there. This is another one that, especially with the rate cut scenario, if the market's liking this rate cut scenario and Russell's looking to maybe outperform, this is still one of the indexes that has not hit all-time highs yet. Okay, all-time highs in the Russell are all the way up here. IWM, it's like 244. So we still have potential Rip City to the upside. I mean, maybe not. But if we do get to all-time highs, that would be a nice, awesome run towards the end of the year. Is trying to get Russell to all-time highs, and maybe it just outperforms. But if we see green across the board, Dow's up, Q's up, SPY's up, so all your major ETFs are up, but your base of your broader market indexes are higher, I think the Russell could possibly outperform. If that's the case, great. There's more upside potential to get to the all-time highs, which we haven't seen since 2021, by the way. And that would be a run of almost 11% over the next maybe 3 to 6 months. So if the Russell can get to those all-time highs, maybe that's an 11% rip on the Russell, and then you have like 3-4% on the S&P, 3-4% on the NASDAQ, maybe 2 to 3% on the Dow. If we have a broad market rally, I would expect maybe the Russell can just outperform. Okay, volatility index. We're sitting here pretty elevated going into the election, which is not a surprise. If I go into term structure, this is another thing we got to pay attention to. So the market is still anticipating that there's going to be higher volatility going into the election, okay, and into the next couple of months. So this is markets anticipating that the front end on the VIX is going to be higher than later. So it's not super long, but like November, December, slightly higher volatility, and then things settle down, and then we get back into this would be our backwardation cycle for the next couple of months, and then we flatten out, and then we go back into contango. Maybe that's crazy to go out to like June and think we're going to get back to like the normal. The VIX term structure should look like this. That's usually what VIX futures looks like, and that's contango. That's the usual look. So anytime it's tilted downward, that's backwardation, which means the risk is way more near term than it is long term. So I'm going to keep a close eye on this, but we basically need to get through the next couple months without some crazy risk on event, or I guess risky event. Risk on is fine. Risk on is, everything goes up, but risky event meaning like things get a little wild and crazy. So market's still anticipating some drama around the volatility index. We have been elevated since the August 5th bottom, which was our vol event right there. It stayed above like 16 or so, 16, 17. And we've gone up around 24. We haven't broken 24, but that's been a lot of volatility just kind of sitting there in the markets without a lot of direction. Yes, we've hit all-time highs recently. I think the S&P is up 47 all-time highs this year, which is pretty impressive. And possibly after the election, if things settle back in and the market starts gravitating back up towards those highs again, then I would imagine the volatility index heads lower. I just want to know, are we heading lower into these recent lows? Are we heading lower back into where we saw lots of low volatility back here? I mean, I'm pretty interested in getting back into the low teens. If we get to the low teens, number one, that's a great rally spot where if the VIX drops into, let's say, 13 or lower, the ability to stay long there and have a lot of upside potential on every major index and a lot of stocks broadly stock markets go higher. If we get below 13 on the VIX, that's going to be an awesome rally in the market. If we stay somewhat elevated at 16, 17 and we stay capped at 22, then maybe it's limited upside. But once we get back into the teens, I'm probably looking at like a Q1, Q2 long vol play into 2025. Because getting back to those levels, that'd be a huge drop in the volatility index, and I'd look for some type of elevated volatility going into next year. So again, lots of stuff to kind of factor in. Dollar index, pretty convincing candle on the dollar. I'm still going to have the patience just to wait. I know it seems crazy. The dollar's dropping. That's fine. How many traders are already long against the dollar? So you buy euro dollar, buy Aussie dollar, buy New Zealand dollar. I'm long pound dollar right now, which is actually working out pretty nicely. So here's pound dollar, currently up about 90 pips or so on that pound dollar. Dollar CAD, I had a breakout trade at 40.25 that I told traders it has to get filled. Hasn't happened yet. So that's a pending order. I'm still waiting. Aussie dollar, I was hoping to come back down to support. We had a big gap higher. Here's another thing that's rare in the Forex market. Having the dollar gap like this, that's ridiculous, actually. Let me check and see if that's a live feed. Let me go to another broker here. Let's go to Oanda. Oh, yeah. I mean, okay. I'm just going to throw this out there. There's the close from Friday, and there's the open today. Now, yes, we wicked a little bit, but one thing that happens in Forex, gaps don't usually go without getting filled. So either this is a big institutional side move where this is going to be just a major pressure on the dollar, or this is a gap that's going to get filled by the end of the week. I wouldn't be surprised if these dollar gaps get filled. So I'm not heavily positioning on this stuff. I think the dollar's still a wait and see. I'd rather be, looking at the election and everything this week and say, okay, it's now. Okay, let's say the dollar just breaks aggressively lower. Okay, well, if it pulls back, then we can sell pullbacks and then take it back down to these lows. Or if we get, let's say it's aggressive, then we get bear flags on smaller time frames, bear flags, that's fine. But what I don't want to do is say, oh, the dollar looks so good today. And we're having the same conversation on Wednesday, Thursday, Friday, and the dollar's all the way back up here. So I see the gaps on the currency side. I would be careful on those because gaps in Forex usually don't last. If they open from a Friday to Monday or Friday to Sunday night and there's big gaps, usually the market's going to find those spots and fill them. So just saying, I wouldn't be surprised if those gap gets filled. So just be careful out there on dollar position. All right. Okay, oil still hanging here at the lows. I'm not calling the floor. I think pressure to the downside on oil means, good things for inflation. If we break the lows and we get lower prices on oil, lower gas at the pump prices, that's all good for inflation data. Okay. If oil stays here and choppy, or I don't know, Middle East stuff, it's not really causing prices to go too much higher for right now. So we'll see. But I'm not doing anything on oil. I would say be mindful of the lows around $66. If we break firmly below that, then we might be heading into 50s real easily. Same thing on oil futures and CL. NG, this is all over the place. I'm just staying out of this. I'm hoping natural gas will pull back into a respectable low, but if it does, awesome. If it doesn't, I'm not trading it. Gold, okay. Gold is fine. Let gold do its thing. I want to pull back on gold. Look, I'm probably not going to add any more if gold goes higher and goes higher and goes higher. I'm just going to ride the current positions that I've had since back here. I'm still long that far back. Okay. Income trades in here, income trades in here. I haven't really added much as this market has gone higher. So I'm still hanging into some profits, letting some option trades expire, still owning shares of GLD. But what I'd like to see on gold would be there's a 21, there's a 50. Give us a pullback, and I'll start repositioning my GC, which is gold futures, GLD, which is my shares, my ETF shares. And I want to just buy some dips on gold. That's it. It's pretty simple. So especially if central banks are cutting rates, gold should be looking better for interest rates. Also, it's an inflation hedge, also a store of value, also a dollar alternative. It's been one of the best looking, healthiest bull markets we've seen this year in the markets. That doesn't look insane, right? It's not an SMCI, which was, who remembers this year? SMCI was one of the best performing stocks all year. Now it's absolute trash. Okay. So don't fall in love with the stock. Here's SMCI. This thing was one of the best performing stocks in the entire year. It was up almost 300%. Okay. In January of 2024 into March, one of the best performing stocks. Now look at it. It's given back literally all of its gains and it's negative on the year. So that's the craziness of stocks. Going to the gold market, it's just looked a lot healthier. We've had nice pushes and pauses, lots of time to accumulate. Market keeps making higher highs. I just said I want to pull back because we're a bit overstretched. We have a decent stretch between the 200 EMA. We're out about 274 bars, but since we've seen it, percentage-wise, it's at a high enough level around 13%. I said somewhere like 15 to 20%. If we get overstretched about 15 to 20% above my 200 EMA, I'm looking for gold to struggle a little bit. I'm not calling the top on gold. I'm just saying that if we have a 13% stretch between my high and my 200 EMA, that price may just revert a little bit, come back in for some pullbacks, and then we can go higher from there. That's fine. But I'm just trying to avoid like this. If it gets really overstretched where gold's way up here and the 200 is, 20% away, usually gold kind of tops out and then starts to revert slightly. Okay. So that's all I'm saying. I'd like to see a pullback. That's my preference. If it goes higher, cool. I enjoy the melt up and I'll just enjoy some more GLD gains, SLV gains, GC, SI, just trading futures, trading some incomes. But if we get pullbacks, cool. Because I want to buy some dips and I want to add some exposure, and it's going to be at really any of these levels. 21, I'm not that interested in because that's the near term. But if we get a 50, probably where I'm going to put in a trade. So I'd say from the 50 down to the 200, I'm looking at some option trades on GLD and or GC to stay the course on gold. Okay. All right. So there's GC, same thing, looking for pullbacks there. GLD, same thing. XAG, this is silver, pretty well supported. Come back into this area, try to get to some fresh highs. First target for me is still 35.88. I've got a covered call on my SLV positions at 35, and I guess unlikely to get called away for now. Bitcoin, we had that big rip last week, came all the way back up near the all-time highs, not to them, not through them, but near them. So near all-time highs, pulled back. So what happens next? I don't know. We'll find out. We are making higher lows. That's a good sign. Okay, backside of this trend line, could we end up just pulling back to here, backside of the trend line, and then starting to go bullish to revisit highs? Sure. Bitcoin looks pretty good. Now, I will say that my opinion on Bitcoin can change very quickly if we take out, let's say, 62.5. If we come all the way back down here to 62.5, do we take out this low? Are we breaking that trend line there? Are we going to make a lower high and a lower low? Could I make a case for bearish Bitcoin? Sure. If price proves that it's taking out some of these lows and changing structure, then maybe this is nothing more than a big fat range. Okay, where this is major resistance, this is major support. But what I see right now is this thing looks better, right? To me, this looks better than just it's a top or a bottom. To me, this is if we're making higher highs and higher lows and we blow through this 74,000 level, I could say that a lot of traders should be excited for about 100K to, I've got a measure move at symmetry around 107. I mean, I'm as excited as anybody else if we get above all-time highs on Bitcoin that we're probably gunning for 100K. So if that's the case, great. And there's lots of ways to trade it. I might be looking at Bitcoin futures if I get filled on them. That's the hard part, is the expirations that I see on Bitcoin futures are not that great. So Bitcoin futures, I mean, I've got contracts out to December and January. I could do, I don't even know if I love this trade. If I did a 69 by 7,000, I mean, I can spend $2,100 to make $2,900. I don't like that at all. It's like something about this Bitcoin futures market is just not as good as just trading Bitcoin or even MicroStrategy or IBIT. It's like there's just better ways to trade it. Unfortunately, I just don't think the futures market is what it's priced out where it's just way too large. You're talking about $1,000 in between strikes. So it's great to be right, but I'm not going to throw out one trade that's going to cost me 1% of these accounts if I'm wrong. So I wish there was a better way to do like more risk-defined trades, but more than likely I'll just stick to IBIT, BITO, FBTC. MicroStrategy is fine for income. Coinbase is okay, but it's not trading like Bitcoin anymore. Some MARA, I've got some exposure on that for some digital mining stuff, but yeah. Otherwise, just buy Coinbase. I mean, in Tasty Trades account, you can buy Bitcoin for nothing. So if I go BTC, if I go GBTC, that was another one you could trade, GBTC. This one's trading at 54. There's no options on this one, but go to the price on GBTC. Interesting. Like it's also not so IBIT is the only one that really looks like it's correlating the same way that Bitcoin is. So there's Bitcoin, there's IBIT, there's FBTC. So your BlackRock and your Fidelity ETFs are the closest resemblance to what the spot price of Bitcoin is actually doing. Okay, so anyway, we'll see. Post-election, if we break all-time highs in Bitcoin, that gets exciting. If Ethereum can make a comeback, we got to get above 28.15. We'll see what happens there. Copper looking a little bit better. Is China up today? A little bit. JD is flat on the day. HSI's up. Alibaba's up. Baidu's up. These are good. I mean, I'd say they're stable. They're not good. This is another thing. Maybe getting through the election this week. If we see another round of like lifting animal spirits and China stimulus, more vocal, another let's say $100 billion in U.S. dollars put into China, or 5 trillion won, or whatever the heck they need to pump in. But I would be wondering if there's more stimulus ahead for China, and if they do it by the end of the year, or if it's something we're gonna have to wait on. So FXI is stable, KWeb is stable, JD is stable, HSI is stable. But we're still going off that crazy rip we saw in September, and I'm just wondering if we get back up to it. So this low, this high, market got all excited. That was during a 2-week holiday, by the way, where there's very little trading. And then the market's like, yeah, we'll see. So I just want to see if we come back and revisit those highs. If we do that, protecting some profit and not forcing a bunch more trades. My exposure on China probably goes out maybe to Q1 next year. That's about as long as I want to hold some of these, unless it's risk-free, and then I'll let it run. Like risk-free on Alibaba, risk-free on Baidu, I'll let those run. JD, I've got an income trade on. I'm trying to get it back up to like $41. I've got a $42 covered call that's out to this Friday. If it gets called away, that's fine. I'll still make some bucks on it. My break even is around $40. So I'll make around $2 a share. And I've got, I think, 500 shares of JD. All right, what else? We did gold, we did silver, copper, Japanese yen, not interested. Nikkei, still just super choppy. I'm going to keep an eye on the Nikkei, but I don't think Japan's going to do anything wild and crazy at this time. Let's go to the DAX. So German DAX, same thing on some of these moving averages. We pull back into the 50, the 100, the 144. We've had a decent little run. Are we able to pull back, generate some good dynamic support, and then try to get back up to those highs again? Trend traders do this. Trend traders look to, buy with tight stop losses. If they, have reward to risk, let your profits run, eliminate risk. It's pretty easy. So if you dollar cost average into these areas with stop losses below, you get the effects of all this potential support. You turn each one of these trades. I mean, think about the difference here, risk profile to reward. That one has the least amount of reward, right, as far as getting back to the highs, but then it gets a little bit bigger here. It gets a little bit bigger here, and it gets really big down here. So you have, as you kind of dollar cost average in, you're getting higher reward to risk with all these dynamic support levels. And I still want to have a plan if I was going to stop myself out. I mean, as long as price isn't invalidating, then we are catching support and we're looking to see if we get back to highs or go higher. So just think about that when it comes to reward to risk. Okay. All right, that's German DAX. We go the FTSE, the UK, still very choppy, also sitting at that 200 EMA. We're able to get back to all-time highs again on the FTSE, maybe. Not a bad spot. I mean, if you're long in here, stop loss below this nice trend line structure that goes back into late 2023. If we get back to the recent highs or the all-time highs, then reward to risk looks pretty good. Bank of England should be cutting rates this week, right? They are expected to cut rates on Thursday. So we've got the Fed and the Bank of England on Thursday, looking for a 4.75 rate. What else? Mag 7, down from last week. Apple is down. Amazon actually had really good earnings. We're trading at 197. Had a nice trade on Amazon last week. Got up to $200. Turned that little butterfly into a nice little trade. I'm still covered on Amazon shares. Google trading at 169. What a fallback that was. We got up to 181, fell back into 169. I still got some bull call spreads by 160, 165. Meta just off the all-time highs. I like to see Meta pull back a little bit deeper if possible. A little deeper would be great. Beat on top and bottom last week in earnings. So a little deeper would be awesome. Microsoft, this one, so I've got a 430 by 435. I'm looking to see if it pulls back just a smidge lower. I might not get this trade, but if we pull back into like 400 or 395, I'm probably going to take this trade, which is one contract, and do the same style of strategy for two contracts. So in this one, I could lose 265. Okay, and if I do two contracts, even if I take the same price, that would give me a 235 profit times 2. So I make $4.70 here and I lose 265 here. I still make money on the trade. So I'm just going to wait a little bit and see if I get a chance to get into two contracts on Microsoft. Netflix, sitting here near all-time highs. I mean, Netflix has been a great one just to have in your portfolio, a dollar cost average. I have some income trades all the way down here for profit. Took an earnings play as a bull call spreads. That worked out nicely. Owning wise, I mean, I'd like to take some of that cash I have at the ready and buy more Netflix, but I'm not buying it at all-time highs. I'm just not. So if we get a gap fill, great. If this can't really sustain the highs or we get a pullback here, you're looking at a gap fill. I'd love to see some dips. Otherwise, I'll just keep trading a bunch of options and stay the heck out of the way and just generate some income, but not have to own the shares nor buy it high. Nvidia, off the lows from Wednesday, had a nice little pullback level. I think Nvidia pulled back, 5 or 6%. even more, 8.4% from top to bottom, or roughly. So in my long Nvidia, I mean, through ratio spreads, through higher implied volatility, but not necessarily getting gung ho about buying at all time highs or close to it. So same type of thing. This one's been over 400 and some bars since we hit the 200 EMA. So I'd almost love to see Nvidia do this. Come a little bit lower, buy the backside of this trend line, find some 100, 144, 200 support, then way more interested in buying longer term Nvidia. Okay. All right, what else? Tesla 248. Sitting here with a January expiration. I do think that Tesla has potential to rip a lot higher. I think if Trump is president, I think Tesla's going to rip a lot higher. I think everything that Elon Musk is doing to support Trump in the way he has been because he's trying to get some favors in the White House over the course of, developing AI or chips in the US, or even going humanoids and automating and beefing profit lines. I mean, I don't know. So I'm long with the intention of this. It's a credit spread that at 270 by 265, I pulled in more credit than I'm risking. So I don't have to do anything on the trade outside of, well, if it goes down, then I will own some shares and I'll use my long put to lower my cost basis. Okay. If it goes higher, then it's just income. And if we break and go higher, I mean, I'm looking at a nice clean break above 275 or so, 280. I think this gets all the way back up towards 400. So there's some open space up here that I'd like to be active in, probably just trade a bunch of option trades. Credit spreads, debit spreads, just be long. There's ways to do that. So if it pulls back though, I mean, you can see my wedge. This is lower highs and higher lows. So we just have this big wedge that's going on. A pullback is fine. I'll own some shares in the low 200s. If I have an opportunity to own shares in the 200s, I will own in the 200s. So let me go back to Tesla here, make sure. I'm pretty sure I didn't get assigned in anything. Let's go to this. Tesla is here. So currently no assignment, just credit spreads, ratio spreads. That's it. Tesla is up around $4,700 for the year with owning like no shares whatsoever. So if I own shares, I think I can easily generate $5 or $10 a share just using some covered calls and a quick wheel strategy. Why January? So I give myself time. Just time. I mean, if this one makes a nice little push, great. January, I can have it expire in full profit. I can do more of those trades and actually stack in some nice profits. Example being, if I want to do it right now, if I want to do a 250, let me look at this right here. So this is a sell put, buy put, which I'm okay owning. If I look at Tesla right now, and I go out to it, so the strikes will be different. That's a good thing. If I go out to January, you can see my bull put spread right here. If I were to buy a 250 and sell the 255, I can risk 228 to make 275. Okay. The only issue with that trade is if I lose on that trade, that one's going to be a loser by expiration. On the credit spread, I can actually own the shares by closing out the long put, taking on the assignment, and then repairing the trades because I'm willing to own the shares at 270. On a bull call spread, that's cost effective. There's no risk of assignment, but I could just space it out. And that's not bad. I mean, 225 to make 275, that's a pretty good trade. And out to January, it's like, well, can we go higher? I hope so. So, I mean, do I love the trade right now at 250? Not really. But if I get the trade at 250 by 245, or I guess it was 245 by 250, so if I buy the 250 call and I sell the 255, if price is above this by January, that's a good thing. That's all I need. So let's see. If this trade is profitable, then I make 268. If this trade is profitable, I'm looking at right now, then I'll make 275. So without owning a share, I can make about $510 without getting any assignment. This one I can assign and work the trade back to profit. This one I can't. This is more of a binary. I win or I lose. But I'd say January just to go out enough time to see, okay, if we have this end of year rally, typically November, December, January, very bullish for the markets. If it is, maybe it's a broad market rip. So it's not a bad trade. Question is, do I like it enough to take it? So if I like this trade a lot, it's probably back down here in the 220 zone. However, you know what? I'm gonna take the trade. Fudge it. I like it enough. Out to January, I'll take the trade. So 250 by 255 only cost me 225. I'm gonna take the trade. So 225. I don't want to pay more than 230 for it. I just got filled to 225. Okay, let's go. Getting filled at 225. Very nice. Okay, so that just got filled. I'm going to add this into my Pulver Alert section, stock options. This will be a new trade on Tesla. Going out to the 11 or the 117.25 expiration. I'm buying the 250 call, selling the 255 call. It's going to cost me $2.25 debit. So that's a 225 max risk per contract and 275. I'm sorry, 275. 275 max profit per contract. Looking to see if Tesla is able to rally bullish November to January. Okay. And I'll add that in here. So buy the 250 call, sell the 255 call, 2.25 debit. Okay. And highlighter on this one right here. Okay, that's in Discord. Throw that into my personal tracker. And then if I have to go at the top of the hour, let me know. Otherwise, I'll go just a few more minutes here. But not a bad trade for the day. Lots of trades to go through. Come on, man. Where's my... Okay, I'm on line of my spreadsheet here, line 322. Tesla 117.25. Buy the 250 call, sell the 255 call, 2.25 debit. Okay, tracked and in. Got it. Okay. Would you double up on Tesla, put spreads like Microsoft? I don't have to double up on it because if I like Tesla enough for ownership, then if we go down here towards this 210, 215 zone, I might just close this trade out where I take the 265 long put and close it. And then I await and see if the broker is going to sign me at 270. Because then I would own shares at 270. Okay. And I collected 268. So, I mean, what I would be doing on Tesla would be if I could own shares in the low 200s, here's what I would do. So let's say price goes down to like 215. Well, 265 minus 215 is $50 of credit. So I take the shares at 270, or I wait assignment at 270, take away the 268 from the original credit spread, and then take away $50 on the long put. I could own shares of Tesla at 217. If I go out and put a covered call on that for 30 days, I could probably get $8 to $10. So let's say I get $8. I lower it by another $8. I own shares at 209. I get it called away at 225 or 230 or 220 even, or 215, and I can repair Tesla pretty easily for income. So the reason I don't have to double up on that with a credit spread is because I can just take the assignment. So if I wanted to, at some point, if Tesla's down enough that I want to own it, then I would just close out the long put early and then wait and see if the broker actually assigns me. There's also a chance because, I'm trading American option style, which means that anytime the buyers and sellers, they could be paired together, I could be given the shares by somebody else in the market. So somebody exercises the right to sell, then I'm obligated to buy. That's the way the option is going to work. So if the broker assigns me early before my expiration, that's fine, but I'll still use the long put as my hedge. Right. So I don't have to double up on Tesla like I would on Microsoft, because Microsoft is a bull call spread, which is a debit. I would just double up because that'd be another debit spread. Make sense? All right. Cool. Bond stuff. So the 10-year was down 2+%. Now it's coming back a little bit. So we are, up. I mean, it's interesting too, like watching the dollar gap the way that it did, it pulled the yields down. So I almost wonder if a weaker dollar is also going to drive yields lower. I mean, for me, just from a personal standpoint, from financing a house in the next 6 months by 2025, I mean, I want yields to drop. I'm not long bonds though. I honestly, like, I'd rather be in gold and silver. I'd rather be in Bitcoin. I'm staying out of bonds. I had a nice run on TLT, made a nice chunk of profit. I consider that timing pretty solid. I played that with the intention of the Fed cutting. They did. That trade worked out great. I'm just glad I wasn't sitting there like holding the bag, hoping that it went, bonds went higher as yields went lower, but it didn't. It completely flipped. So anyway, I'm not in bonds. I hope that yields go lower. Okay. All right. Currency futures. Actually, oil futures, man, oil futures is super volatile, but I'm curious right now. So oil futures, what's the expiration I'd be looking for here? 11 days is like no time whatsoever. But if I did, let's see, CL prices. I'm just curious what it prices out to be. I don't know if I'm going to take this trade or not. But if I said, okay, to the downside, we don't really go below 65 and we don't really go above 75. I mean, that could be a pretty good trade. So 75, if I did a sell call, that's a 26 delta. Oof, that's a little high. I could go probably lower than that. Let's do like a 15 or 16 delta at 78, and then do on the put side, same thing. Maybe a 15 delta at 66, 12 delta. Okay, so I'm getting way more premium on the call side. Interesting. So on the indexes, you're getting more premium on the put side. On oil, you're getting more premium on the call side. Okay. Let's go down to like the 15 delta. So if I do an iron condor here, let me see what the risk would be. If I go 66 by 65, 78 by 79, I just don't love that trade. It's risk defined, so I mean, I don't lose a ton. The idea would be to manage some profit out of this 210 credit. I don't know. Nah, it's not worth it. I mean, it's about a 10% return on capital for the buying power. Return on equity is not bad, but risk is certainly greater if I lose. So never mind. I don't like it. I'm just staying out of oil. So summary for me today. We have a lot of stuff going on this week. Elections tomorrow. We'll see how dramatic it gets. We got the Fed on Thursday. We got 1,000+ companies reporting earnings. If the consensus is good, that's fine. It's really, I don't think the market really cares. I mean, I think the market cares if we have a Republican sweep or we have a Democratic sweep. I think the market cares if it's maybe there's a threat of policy change, maybe there's not. I mean, probably the ideal situation for the market to rally. And again, this is just opinion. I think the market would probably rally higher on a Trump victory because there's probably more benefits coming to corporate America. There's probably more benefits coming to just healthy tax cuts for wealthy. Trump will probably induce a bit more of a rally as far as like right out of the gates. Okay. Now, is a Harris victory going to be the end of the market? No. I mean, it's going to be the same policy we've seen for the last four years. We're still going to have fiscal spending. And crazy stuff is like government's taken in about 60+% more over the last 20 years, like 60+% more tax revenue than it had back in like early 2000s. But they're spending 93% more. So it's not a tax problem, it's a spending problem. And both parties right now in power would very likely be adding to the deficit. And right now, from what I'm reading, Trump's probably going to add $6 or $7 trillion to the deficit. Harris or Democrats would probably add $4 trillion. Government is still going to spend. So I don't think the market really cares. I think if it comes to policy shift, Republicans are probably more pro-business, deregulation, better tax rates, right? But the spending problem is still going to be something that cripples the economy down the road. I don't know. I don't think this is going to be the greatest ending. We've had a great run. We've had an awesome expansion. We dodged, we bobbed and weaved and we dodged all these recession threats. But that's also why it hasn't happened, because everyone says it's going to. It's like people learned from 2008, and so they're just planning around never having 2008 ever happen again. Okay, people learned in 2020. Well, we'll never let that happen again. It's like, look, somehow the market's going to cleanse and purge and reset, and we have to either have the cash to absorb it and deploy and buy at discounts, or we're going to be fully exposed and get torched. I'd like to be in the former camp, which is I have cash at the ready to deploy, and I just try to generate income without taking up a bunch of capital. If the markets melt up, cool, there's money to be made. If the markets blow the tops off, cool, there's money to be made. If the markets drop 5, 8, 10, 15, 20%, it's going to be painful. But knowing that I've got cash at the ready to deploy at discounts probably sets me up for longer term success than being fully exposed and getting hurt, badly on a pullback. Make sense? So, all right. So we did everything. We did all the indexes. We did dollar. We did gold, silver. We did Bitcoin. Things to watch. We did Mag 7. I mean, pay attention to your prices. All I'm doing on my charts, I've got a lot of simple moving averages here. These are all exponential, so I don't want to say simple because that's an actual moving average. But these are exponential moving averages: the 21, the 50, the 100, the 144, the 200. I'm not saying I'm going to wait all the way until the 200, but I would like to see if the market is capable of pulling back into, like, let's say a 100 before we find some footing. Okay, if this is all we get is a 3% pullback and this market goes higher, fine. I've already added some trades in, but they're mostly just income trades. As far as like my heavy deployments, it's going to be at deeper discounts. And I don't know if we're going to get them. But if we do, I want to be at the ready. If we don't, market melt up is fine. Remember, November, December, January are 3 of the most bullish months in the market. If you take a look at Edgefinder and go to the seasonality, you'll see that. And on top of that, one thing to look at, I did this in a live session last week. Wednesday of this week, the day after the election, if that candle on Wednesday for the S&P closes red or closes green, that's a typical indicator of about a 2 to 4 week trend. So if we close green on Wednesday for the S&P, I'd like to be bullish. If we close red on Wednesday, I'm going to be bearish. Only in the short term, but looking to actually follow some trends. I'm going to go month to year trends, November, December, and January. So here's a good look at it. Okay, so for the last 10 years, okay, December to January, February, that's a pretty good window. Now, November, it's interesting how this actually shows like flat the last 10 years, 0.05, I think is what that shows. So it's flat. And this is not necessarily taking into effect the election years, but we have a couple things, right? First half of the year, market was over 10%. Probability is the second half is going to match that or be beyond that. Now we're up 20+% already, right? We're up 20+% of the S&P, but just maintaining that as opposed to giving it back. Probability is we find a way to stretch higher. One thing that's never happened in the history of the stock market is to have gold up 25% and the S&P 25% in the same year. It's never happened. So can it happen this year? Sure. Maybe that's our big outlier. Gold is up and the S&P is up. Everything's up. It's the easiest bull market in the world. Even though it's not, It's been a weird bull market. It was highly concentrated, AI bubble, pullback and flash crash in August because of the Japanese yen and other things. But, market's resilient as it always is. So could we have some weird correlations? Yes. But are there ways to make money if we melt up higher? Of course. Okay. But from November, December, January, even into February, those are some pretty good months to just be focused on being bullish. Okay. Now, if we get the traction to show that we're going bullish into November post-election, that's probably a great thing. What's the Fed going to do to derail it? Probably not much. They'll just cut rates. They're cutting rates November this week on Thursday, most likely like 99% probability. And then in December, another rate cut before the end of the year. Now, 2025 is a whole different story, because if they still cut rates and the market's melting up and inflation data shows that it's getting stickier, getting higher, CPI is up plus 2.6, 2.7, 2.8. It's a big difference. Okay, I already saw in a podcast I listened to this weekend, forecast for CPI this next print for the month of November is going to be a 2.6 CPI. We're just at a 2.4. It's not a good thing. That's not trending the right direction. That's not going down to the 2% target. That's getting stickier, right? So anyway, we'll see. All right, before I leave today, I know there's some links in there for Edgefinder trial. We had the Black Friday special. It's still going on. Get your hands on an awesome discount on the Edgefinder Pro, plus a stock box, pulver alerts from Nick and Frank and the team. So, they're hooking you up with some great deals for the rest of the year. And yeah, I'm happy to be a part of it. Anybody that's buying the big fancy Gold Star bundle, Gold VIP plus alerts, things like that, I've got a full options course for you, free of charge. I'll just include that if you buy the big alerts and the gold bundle. Okay. There you go, 40% off Black Friday sale. By the way, also on November 12th, make sure you register for the webinar that Nick and I are doing to talk about the remainder of the year. This will be post-election, so this week and going into next week's webinar. Looking forward to doing that on November 12th at 10 a.m. Eastern time. It's a free webinar to attend, but you have to register for it. So make sure you get registered for that session. There you go. All right, thanks everybody. Have a good rest of the day. See you soon. Bye.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, pulver alerts, the Edgefinder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.